Rivian is unveiling the R2 this week, and the question that investors have to ask themselves is this the vehicle that is ultimately going to save the company? The R2 is going to be built in Georgia at the new $5 billion plant that is expected to open sometime in 2026. But the challenge for Rivian after the recent earnings report is really just survival to getting to the point where they're going to actually launch the R2, because the results that were announced and the guidance that were given for 2024, I think, were extremely weak. They showed that there wasn't a lot of demand for vehicles. Cash burn is going to continue at a really unsustainable rate throughout 2024 at least. And the falling stock price is now a fundamental problem if they do need to raise cash. And this has just become a math problem for Rivian. I want to go through the numbers and why I think the company's cash challenge is a much bigger problem than a lot of investors think. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's just start with a couple of charts about Rivian's operations and where the cash is currently going. The first one is Rivian's operating cash flow. So this does not include capital expenditures. So the $5 billion that I talked about being invested in Georgia, that would not be included in this chart. This is just how much money the company is losing from making vehicles today. You can see that that has gotten better over the last couple of quarters, but the company's still burning nearly $5 billion a year. That's the run rate right now. So that's something to keep in mind as we look at what the balance sheet looks like going into not only this year, but what it will likely look like going into next year. Currently, Rivian has $9.4 billion in cash on the balance sheet. That sounds like a lot of money, but if you just go through the cash they're going to be spending over the next 2 years, it runs out pretty quickly. The first thing is going to be just cash from operations in 2024. I'm estimating about $3 billion burned from cash from operations. That's going to be obviously an improvement from 2023, which is the chart that I showed earlier. And that's going to be partially because of some cost reductions that management is putting into place at the factory, layoffs, but they're still going to burn cash, and management guided for $2.7 billion negative adjusted EBITDA. So I think a $3 billion cash burn level from operations is probably a reasonable assumption right now. Now, assume that that gets a little bit better in 2025. Maybe they increase production, which they're not going to do in 2024. Maybe that gets to $2 billion in cash burn in 2025. So now you burn through $5 billion of the $9.44 billion on the balance sheet. And we haven't even talked about building the Georgia plant yet. That is a $5 billion capital expenditure expected to open in 2026, but probably isn't going to open early in 2026. And it's very possible, given the likely delays that always happen in manufacturing and product ramp up, that it could happen maybe in 2027. We'll get some more details on that in future conference calls and earnings reports, but the $5 billion number is something that has been out there for quite a while now. And if you just use that as the capital expenditure number and the $3 billion and $2 billion cash burn numbers that I talked about earlier, you end up with Rivian being at a negative $600 million cash balance by the end of 2025. I don't think it's unreasonable to think that that's about where they're going to be 2 years from now. And like I said, they're still not going to be cash flow positive. That Georgia plant may not be open. They will not have ramped up production, so they're not going to be cash flow positive in that plant from day one on January 1st, 2026. That could take a year, 2 years to get to profitability. The Normal, Illinois plant still has not gotten to profitability. And oh, by the way, on top of that, debt suddenly starts to become a challenge for Rivian. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. I talked about what cash burn was going to look like, but what I didn't talk about yet is the fact that Rivian does have $4.4 billion worth of debt on the balance sheet. So some of that cash in the future is going to have to be used to pay down debt, or they're going to have to find other sources of financing. The first bill comes due in 2026. That is $1.25 billion that is going to come due in October 2026. So I outlined how it's very possible that Rivian runs out of cash by the end of 2025. That is on top of needing $1.25 billion to pay down debt in 2026. And this is where the stock price starts to become a challenge. As I'm recording over the weekend, Rivian's market cap is $11.1 billion. If Rivian needs to raise let's say $3-4 billion over the next couple of years to pay for the cash burn from operations, build out the Georgia facility, and ramp production on R2. Where is that money going to come from? Well, they're probably not going to be able to raise debt. If we go back to these debt numbers, Rivian is already paying an 11.3% effective interest rate. That's an extremely high interest rate, and this money was raised in an environment where Rivian stock was much more highly valued. So we're now getting to the point where Rivian is likely only going to be able to raise money through equity markets. Debt markets, I wouldn't be surprised if they're completely closed to Rivian. So what do you do if you need to raise a few $1 billion? If that announcement were announced today, it's likely the stock would continue to drop. So that's going to dilute shareholders even further. And remember, we don't know exactly when this cash burn phase is going to end or how much money the company is going to need. You could conceivably get to the point where Rivian is going to need $5 to $10 billion in additional capital to get to the point where they can ramp R2 and actually get to free cash flow positive in their business. How do you do that when you have a market cap of $11 billion and falling? Remember, the stock is down 33% over the past year, down 91% since the IPO. So just trending in the wrong direction, and this really reduces the amount of options that you have to raise capital. I think no matter how positively you want to look at Rivian today, it's very clear the company is going to need additional money to get to the point where it can actually ramp the R2 vehicle. $9.4 billion in cash. You have $1.25 billion that is due in 2026, $5 billion to build out the Georgia facility. Those two bills alone only leave you with $3.15 billion worth of cash. That negative adjusted EBITDA guidance for 2024 was negative $2.7 billion. So that alone gets you to burning through almost all your cash. And we haven't even talked about the cash burn that is likely to happen in 2025. So I think this is where Rivian is really between a rock and a hard place. The company is still relatively highly valued. Like I said, about $11 billion market cap, but it probably doesn't have enough cash to get to the point where it can actually launch R2. So I think they need to raise capital sooner rather than later. That probably means selling stock, probably means a very dilutive stock offering, or the other option would be trying to sell themselves to one of the other automakers. The problem with that is a lot of the automakers that would be interested in buying Rivian aren't all that much more highly valued than Rivian is today. GM and Ford are valued at about $50 billion, despite the fact that they're much, much bigger companies. So why would they want to use $10, $15 billion of their capital trying to buy Rivian at the current stock price, especially given the investment that it's going to take to launch Rivian's vehicles? So I think this is really the challenge for the company. No easy answers. I know there's going to be a lot of excitement about R2, but the fundamental question that investors need to ask is how in the world they're going to get to the point where they can actually launch the R2 vehicle and make a profit on it. Because I haven't even gotten to that. We don't know what the economics are going to be. We know that Rivian loses money on every single vehicle that it sells, and it's selling vehicles for over $70,000 today. What is it going to do when it has to reduce that price to $40,000, $50,000? I think this is a much bigger challenge than a lot of investors think, but we'll see what management has to say this week when R2 is announced. What do you think about R2 and the future for Rivian? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.